All right, and we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. There's a lot of stuff that's been happening in the space over the past several days here that I want to bring to your attention and discuss. There's a lot of crazy stuff that's going to come up this week. All right, especially tomorrow. So you'll make sure to watch this live stream before tomorrow. I'm going to answer some of your questions, check on the crypto markets, check the trends on chain, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Culture Eyes, Technically, Dale, let's see here, Sarthak, hope I'm saying that right, Capital Ape, Automatic Beats, real name is Mike, Bruno, Sunil, welcome. All right, so let's go ahead and jump into this here. Let's start off with the first thing that happened a couple days ago and do a post-mortem on this because this is something that a lot of people are talking about, and I wanted to sort of bring to your attention and explain it because I've seen people ask about this, like, hey, what's going on here? So basically, we had an outage on Solana over the past couple days that was for 7 hours long. Okay, so let's just kind of break down exactly what happened here. So basically, we have millions of transactions per second and heavy traffic contributed to the network disruption, developers explained on Tuesday. So bots tried to tied to a new non-fungible token, NFT. Of course, most people watching this video know what an NFT is. Built on Solana, caused a 7-hour network outage on Saturday. So the project developers confirmed in a post on Tuesday. So no new blocks were produced by the network during that time. So what does that mean? Well, basically it means that the entire network just stopped working. So basically, was block production. So block production is what happens whenever, you're making transactions on the network and those actually get included into the blockchain. You have a consensus mechanism at the blockchain level where all the nodes participate in confirming that transaction and it gets included into the blockchain public ledger. Well, that process basically wasn't happening, for the better part of a day. On Saturday. So how did it happen? Okay, so essentially what happened is kind of like have you ever heard of a DDoS attack on a website? So DDoS. So let's just pull it up on my screen here. So what is a DDoS attack? So Cloudflare, have you ever heard of that? They got really famous for helping prevent DDoS attacks. This is something that exists in all types of software development, but particularly in web development. People think about DDoS because it's a denial of service attack. So have you ever heard of people DDoSing a website? They basically take bots and then they go try to use it as much as they possibly can, hit your web server until it just overloads it and it basically just blows up. Now that's kind of what happened here, okay? So basically, let's just explain that. So Solana processes an average of 2,700 transactions per second, as the Block Explorer show, with an upper peak of 710,000 transactions per second. So however, on Saturday night, millions of transactions flooded the network each second. This led to network validators or entities that process transactions on that support the network to run out of memory and just straight up crash. Okay, so an enormous amount of inbound transactions, 6 million per second, flooded the network, surpassing 100 gigabytes of traffic at individual nodes. So each individual node that's running the blockchain. There's no evidence of a denial of service attack, okay, but evidence indicates that the bots tried to programmatically win a new NFT being minted using by the popular Candy Machine program. So I think what the comment there is it was not evidence that the intent was to DDoS, but that's effectively what happened. Is he made so many requests that essentially it just blew up like you would do on a web server. So, I mean, DDoSing kind of has the intent of you're trying to make this thing go down by too many requests, but it'd be like the same type of thing where, a popular website, had so much traffic that it just goes down, okay? Kind of like we saw with the Coinbase website in the Super Bowl commercial. Everybody scans their QR code, and then boom, like the page that they're sending traffic to just doesn't even work because it can't handle the load. So, the bots were trying to mint these NFTs, and then basically they were trying to mint for a fixed price for this Dutch auction. And it just was so popular. So here's the other thing. We have this problem all the time where bots are like trying to game NFT drops where they're sitting there like calling the mint function. So one potential issue with this that we kind of talk about when you're talking about like trade-offs of blockchain scalability is one potential issue with this is the decision here to scale with those computational resources at the base chain layer itself. So this is a lot of people talk about certain blockchains being too expensive to use, like Ethereum, for example, too expensive to use. We have to understand that one reason you have fees on Ethereum in the first place, and the fees are going to get better over time. We'll talk about that here in a minute. One of the reasons you have transaction fees on a blockchain in the first place, like some people just say, hey, why do you even have gas? Like why do you have to pay to use a blockchain in the first place? Well, it's to prevent this kind of stuff, right? You prevent spam on the network, because if a blockchain was just free to use, then people could just spam it all the time. You could just sit here and do denial of service request, attacks pretty easily without any real repercussions because you didn't lose any money. But if you wanted to make 1 million transactions, just to even send a token on ETH, like you're looking at millions of dollars. You just spend like millions of dollars per second to try to like take down a network. And like that's like hardly anybody out there on the face of the planet is going to want to do that just to make a network stop running for a brief period of time. And maybe if you can find a way to like move money around when that happened, you might take the risk, but hardly anybody's going to do that. So it's a different story when you're talking about something that is really cheap to make transactions on and can do a lot of transactions really fast, and the benefit of potentially being able to execute those transactions, that you can get some sort of financial gain out of it. Okay. So that's a real problem when you have something that's really low cost like this, where the way that you're able to offer that low cost scalability is to like increase, CPU resources required to run a blockchain. And so, when you're talking about something that has a theoretical limit in terms of the computational resources, and then you start pushing it to that limit, like it's really hard to spin up the extra resources to make that thing stay stable during a time like this where it's heavily stressed. All right. So you're witnessing like some of the design trade-offs of certain blockchain architectural patterns and how they're actually working in the wild or not. So, of course, this entire space is new. We've had other chains, suffer problems in the past. ETH has had problems in the past. I'm not like saying anybody's immune to this, but you're witnessing, what potential trade-offs or what certain side effects are of trade-offs that get made in architectural decisions. Okay, so contrast that to what we saw yesterday with Ethereum. During the other side land drop over this past weekend, okay, we saw insane gas war. I mean, Ethereum gas went up. It's like the highest I think it's ever been. Part of that's because it's gas optimized. The contract was not gas optimized, and of course, after that they were like, "Hey, we're gonna go create our own blockchain." But like the network didn't go down like at all. Like people were not able to really effectively use the network. That's different. Like nobody wants to make transactions during that time because it's so expensive to use. But nodes didn't go down. Like we didn't see, we didn't see the network fail to produce blocks or something like that. It was actually a pretty impressive stress test that it handled. Okay, so yeah, that's another reason that I'm super bullish on that particular technology, is that it's stood this test of time of being very resilient and to continue to produce blocks. Now, let's talk about Ethereum's plan to scale. Definitely with layer 2 scaling solutions. We do have that second layer building on top of Ethereum. That's basically what the scalability is there for. That's what layer 2 scaling solutions are for. Basically, that's the plan to help reduce ETH gas fees and do more transactions per second, is to create that second layer environment where you can do transactions that get, piggyback off Ethereum security. Now, these are being stress tested right now. And so these will, require the test of time to also see which ones prove, like they're going to work well in the long term. Okay, so lots of stuff is new and needs to undergo that stress test. And we're just seeing it play out in real time. So it's a really interesting time to be in the space. That's another reason why you're saying that's important not to, risk too much money that you need access to all the time on a blockchain, because, well, the blockchain itself, does have some risk associated with it, especially if it's a really new blockchain that has not stood the test of time and has not undergone a lot of these stress tests. So anyway, just want to talk about that because that's something that people have been asking. People's like, hey, like what happened here? Can you explain it? Can you talk about it? That's sort of my post-mortem on exactly what happened and to give you kind of an insight into, where my head's at with the whole thing. So let me know what y'all think down in the comment section below. Were you affected by the outage? So will E2.0 have the same model of gas increasing during high volume periods or just cheaper? So you have to look at E2.0 versus E2 scaling solutions. All right. So depending on the scaling solution, the transactions, So first of all, let's talk about two differences. So Ethereum 2.0 versus layer 2 scaling. So first and foremost, Ethereum 2.0 is not going to fix Ethereum's gas fee problem. It's a super common misconception. Like whenever the merge ships, hopefully later this year, it's not going to make ETH gas fees just go down. Okay, that's what layer 2 scaling solutions are for. But that's actually good news because that means Ethereum can scale now. You don't have to wait for Ethereum 2.0 to ship. So a lot of these work in roll-ups, which basically means you take a bunch of transactions and you roll them up into a smaller piece of information and you put that information back on the main blockchain. That's how you scale. You can take the same thing and put less information on it, and that is information about more information, and that's scaling. It's just more data with a smaller footprint and the same amount of space, same amount of disk space. That's one way you scale. So whenever whenever people are doing transactions in that second environment, let's say a roll-up, just for easy math, can contain 100 transactions, okay? That's not the real number, but let's just say it. So let's say 100 people do transactions, and they all do one transaction, and those 100 transactions get rolled up into a single transaction that gets put back on the Ethereum main chain, okay? Let's say that's the theoretical limit. So, if 1,000 or 100 people do that, they're all equally paying the cost to get into that, okay, and the speed, right? So basically, the more people do it, the cheaper that gets. All right, so if the less people do it, the more expensive it is. So depending on the type of technology, okay, so it is true of some layer 2 scaling solutions that the more people do it, the better the outcome is for everybody because they're splitting the cost. Somebody says my buddy had bots to buy a limited edition Jordan back in the days. I'm sure there are many bots buying all the Ticketmaster event tickets. That's somebody says, yeah. Somebody says macro news has been too negative for investments. Basically, the only hope for crypto to come back is for macro to subside. Yeah, so let's actually take a look at what's going on this week. We'll kind of check on the crypto markets, look at some important, things on the calendar for this week. So, of course, tomorrow is going to be, we're going to have the minutes from the, we'll have the final outcome of the Federal Reserve meeting. Okay, so, here's the current thought on that. So Fed meeting decision looks baked, but outlook is far from certain. Okay, so the Federal Open Market Committee is holding its 2-day closed-door meeting starting today. That's today you're watching this video. It's a 2-day meeting, so the second day is tomorrow, and we will see the outcome of that meeting tomorrow, I believe at 11 a.m. Eastern time. Maybe it says in the article here. It's usually about that time that we, hear somebody come out and talk about what they're going to do. So 7 weeks after the Federal Reserve raised the benchmark U.S. interest rate for the first time since 2018, the central bank is set to hold its third meeting of the year as monetary policy makers struggle to contain inflation. All right, so the 2-day closed-door meeting is likely to contain few surprises since Fed Chair Jerome Powell has already tipped the likely decision. but crypto traders and counterparts in traditional markets will be watching very closely for clues on the central bank's future plans, with some economists now worried about the prospect of a recession at a time when consumer prices are already rising at their fastest pace in 4 decades. All right, so basically, I think most people are anticipating a 50 basis point interest rate hike and basically tightening of monetary conditions. It's basically reducing the size of the balance sheet. Okay. We'll see. I mean, the sentiment here is that a lot of people, that's their expectations, and that those expectations are now priced in. And what we saw last time this happened was basically, things got kind of bearish right before the meeting, and then basically people's expectations were met during the meeting. They were not worse than the expectations, and then we kind of got a 2 weeks of green right after, okay, like a little bit of a relief pump, but then we ultimately ended up back to where we are now. So we'll see if that happens. I mean, the biggest thing is we're crossing our fingers that things aren't worse in people's expectations, that they don't do something like, 75 basis point hike or worse, or that, Jay Powell says something that kind of like freaks people out. Fed speak is real. It's hard to decipher sometimes, but I'll put it this way: traders are pretty good at picking up the details, and they will likely react in real time to whatever is said. So what does that mean for the crypto markets? Well, it's really hard to tell. I think, like I was saying a second ago, I think the realistic scenario here is that we're hoping that things aren't worse than people's expectations. And if that's the case, then it would not probably result in a nuke downward or anything like that. I'm not really holding out hope that they're going to be like, oh, we're gonna only do a quarter basis point hike, or like we've seen that inflation's under control or something. I don't think it's going to happen. Some are hoping for that. That's a little too hopeful in my opinion. But hey, I'd love to be wrong. I'll happily join the live stream tomorrow and say, guys, I was dead wrong, and we're all going to make it. Now, that being said, long term, I think that the market now is totally different from it was in 2018, 2019, when we were going through the bear market back then. Because right now, I think what most people are thinking is like, well, I just kind of want to wait for the economy to turn around, and then I'm going to buy some more crypto. I think that's like the big that's the big idea in people's mind, as opposed to 2018, bear market back then. It was sort of like, I'm not sure about this crypto thing. Like it might be a scam, and we might never get back to here again. And I don't think that's what people are thinking right now. I think they're like, okay, let's just get this war over with. Let's go ahead and do our interest rate hikes. Let's let the economy get back on track. Let's get the recession behind us, and then let's buy some more crypto, because we're probably going back right here and beyond. It's just a matter of time. I think that's the sentiment in the room. So we'll see. So this is the main reason Solana is so broke is because it just hit double the volume. Yeah, definitely. Someone says they're going to scare everyone into dumping to buy it all up. Let's see here. So this is hope crypto will go up, but it's looking really bad. I mean, short term, yeah, things are bearish. There's no doubt about that. Especially if you look at, if we look at a more technical chart, like I can pull up trading over here. In terms of like our long-term moving averages and stuff, yeah, things look pretty rough. We look at the support line here. I mean, depending on where you draw it, like it looks like that support line is breaking down. Okay. All our long-term moving averages are bull market support band, 200-day moving average, 50-day moving average. It doesn't look good in the short term. So all the technicals are screaming, screaming bad. That doesn't necessarily mean we're gonna hit a nuke downward, like, because the other perspective on this, the other perspective on this is like, whenever we saw, like, I've been here through a lot of stuff. I saw the 2018, 2019 bear market. I was here for the COVID dump, and let's take the COVID dump for example, right? Like, after that happened, everybody's sitting there going like, okay, like, how low are we gonna go? And by the time everybody was expecting, max pain to be farther down below where they currently were, like, we'd already started to recover. Okay. Now this is a totally different time. Not any financial advice. I'm not saying like, buy the dip and be fearful when others are greedy and greedy when others are fearful. Like, that is kind of true, but you can't systematically do that, or you buy every single crypto that went to zero, right? Or you'd be holding on to crypto every time the price dipped and kept on dipping. But I do think that there could be an element of surprise to where the bottom is/was, as in like say for example, like right now, we just had, a 1 quarter of negative GDP growth, which is, you need 2 quarters of negative GDP growth in order to be in a recession. Like, we might already be in the recession right now. You just have to wait for the second quarter to finish, which is at the end of June. In July, or probably by the end of July, we'll find out what the GDP numbers were for June. And it might be like, okay, the recession just happened. And like, maybe we're moving on from it. And so in a similar way, what I'm saying is like, the bottom could form and then just elude everybody. And then you could be sitting there going like, oh, like, that was the bottom. Just like tops are hard to call, bottoms are also hard to call. Like, you didn't know, like, hardly anybody knew this was a Bitcoin top right here, until really, like, kind of after things broke down, like right here. Like, it kind of felt like this was just a dip, okay, because of what had been happening, prior to that. Like, we saw, like, if you look at this, all right, this felt like now let's see through all this, like, this, and then, okay, and then this, and then, like, this felt like a dip, all right, November 30th, but then you start to get this first hint that even broke down, and then we try to push up, and it breaks down, and it breaks down, and it breaks down. So you don't really see that was a top for a while. And so very similarly, we might hit a bottom when people are least expecting it because they're too scared to buy. And then the move just like misses them and totally eludes them. So we'll see. I don't know. I don't claim to be a top caller or a bottom caller. But I do have lots of reasons to expect that crypto is going to return to an uptrend at some point. I just don't know when it's going to happen. Short term is really hard to tell, but I do know the big factors that affect it. I don't pretend to be a genius in terms of macroeconomics or expert trader by any stretch of the imagination, but it does not take a genius to see what the main factors are that are affecting this market. And my opinion, as soon as those things kind of get under control, we can continue our journey towards 100K per Bitcoin. Somebody says crypto taxes don't exist. That would be nice. All right, so let's see what's trending on chain here. Okay, so yeah, let's see what's trending on chain here. So basically, I'm just gonna check I check Blockside here. You can check the link down below if you want to see this in real time. But this is what I do on a daily basis. I just check to see what new contracts been deployed to the network with significant financial inflows into them. I can see different people who deposited in those contracts and how much money. So basically, this is just what I use to start for research. On a daily basis. If you want to do this in real time, get alerts, you can definitely check that link down below. But what I do is I go through and research stuff. Again, it's not financial advice. I just look to see what's there. I find about stuff. This is the beginning of a due diligence process. I'm not saying that like every project that pull up is going to be a winner or anything like that. But this is basically what I do. So I'll go here and just like check on one of these addresses. So let's look at this one right here. So this is the something token. Okay. So is this let's actually look at there's a couple different ones. There's Americana.io. So buy and sell physical things as NFTs. So this definitely looks like an American Apparel website. That's the first thing that jumps out at me here. So that's definitely where the design language is coming from. It looks like American Apparel meets IKEA. That's what I'm thinking here. So this looks like an NFT drop that's happening right now. So the something token. So here's the mint price, 25 tokens per wallet. Basically a 10,000 NFTs. So you got to connect your wallet. Okay, awesome. That's pretty interesting. So we're talking about NFTs as physical items. I did think we're headed in that direction of NFTs that back physical items, especially if you're talking about authenticity and all that type of stuff. So what is this next one? It's NFT.com Genesis key. Okay, so basically what I would do is I would literally just Google it. Okay. So here we go. NFT.com. The Genesis key public sale has started. So connect with one of our available. So basically, you gotta connect your MetaMask wallet. So about the project. So Genesis keys allow you to mint 2 NFT.com profiles to gain access to an exclusive community. So Genesis keys are animated digital NFT keys on the Ethereum blockchain. Each Genesis key holder will have the ability to mint 2 NFT.com profiles and also be a founding member of the NFT.com community. So here's all the tokenomics. Let's say we got one more in here. Let's take a look. Let's see here. So we got a new Uniswap pool. Let's see here. So it looks like it's a new Uniswap pool for V3 for Frax USDC. Okay. So if I look at this up, so this is how I'd figure this out. So basically, Frax right here, you can see is $1. Here's the price history. It's a stable coin. So Frax USDC, pooling for that on something like Uniswap, probably using like Uniswap's concentrated liquidity. And most likely, this is a yield earning opportunity. So that's kind of how I think about this. Is you can see new tokens that are potentially launching. that you could speculate on in terms of price performance. But you can also find things like DeFi opportunities to who are offering high yields. That's how I go down that rabbit hole and see what kind of yields you could potentially offer by providing liquidity in that case. So there's so much you can do. Find out NFT projects. You can get real-time alerts about what other big wallets are buying. Check the trends on chain. Find the best DeFi opportunities. Tokens speculate on. I found a lot of winners this exact way through what I'm talking about. I saw ApeCoin when it first launched before it hit social media. A lot of big projects that have happened recently. Stargate Finance. Some of these up-and-coming NFT projects. We have a lot of people from our member group who are doing like 2x's in a pretty short amount of time. I mean, the NFT rotation game is still hot, still strong. Somebody says, I'm trying to learn Solidity myself to create a bot that uses flash swaps. Can you help? Yeah, definitely. You should have to check out that trading bot masterclass we just did. We'll have to open that up again at some point in time. But yeah, stay tuned. We'll do another one. Let's see here. All right, everybody. That's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so that more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.